as to what are the first three things you have to look at when buying real estate.
Come to power, either reduce the price or up your game.
But in a way, it's good because you keep abreast of exactly what is happening, trend markets,
True.
what is coming through, payment plans.
Yeah. Welcome to Dubai Property Watch episode 4. I'm Danyal Tirmazi, the Director for Off-Plan Sales, hosting our podcast tonight. And I'm joined by Prince, who is the Director of the Secondary Market. Thank you very much for taking time out.
Thank you, Danny, for having me.
And thank you for being here for a short discussion.
Thank you.
Today we're going to be discussing off-plan
versus secondary.
And it was the secondary. Well, I don't want to say versus, pits us up against each other, but they're very different.
They are.
And the strategies that involve investing into off-plan, the clientele that gets involved with each one of those verticals has a different mindset and different approach. And we wanted to touch upon some of those areas today. Couldn't think of anybody else better to speak to about the secondary market
Than the secondary director. Very true.
Right on. And so yeah, can you tell us a little bit about the secondary market, what you're looking at with Aqua, what your purview is, what the areas are before we dive into it?
Of course. So at Aqua, you know anyway, but at Aqua we try to establish ourselves in good areas, transacting areas, like key areas, local attractions. Blue Waters, we have an office in Port de la Mer. Sheikh Zayed Road is head office, so anyone who has been in Dubai for a long time, the best location for an office.
Yeah.
Again, from a landmark perspective. And then Serena, we have an office as well. And hopefully, inshallah, we'll open up more offices.
Absolutely, yeah. We've got some other areas on our radar. So Prince, in your opinion, what's the difference between primary and secondary sales in the Dubai real estate market?
I think primary initially is what has built Dubai. So we rely on good developers to pitch us a concept. And again, we are the backbone. We invest into the concept, into the project, with hopefully very favorable payment terms. But primary is a project that is going to hand over maybe 3-4 years from conception. Whereas secondary is a ready project. You can touch it, you can feel it. Ideally, you can move into it straight away. So they have pros and cons either side.
And for people who may not be familiar, there's a different acquisition and purchasing process that goes for primary versus secondary market as well. If you can touch upon, I mean, with off-plan and primary, it's usually, you make a booking, you get a reservation form, you go put a down payment, you have a sales purchase agreement that you sign, you get a pre-title deed till the property is handed over, and then you get a title deed.
Indeed.
And I think for the secondary market, it's slightly different.
The secondary market is different. So if you like a particular project in a community, you pay usually a broker 2%. So that is a 2% buyer's commission, 4% DLD.
Right.
There's a trustee fee as well. Ideally, if everything is paid on the property from the previous owner in relation to service charges, then you can get the NOC.
Right.
You go to a trustee, do the initial due diligence with the manager's check, make sure everything's good to go, and then you get ownership of the property, and the previous seller gets, again, what he feels the property is worth. So that's initially the process. You do have different variations. It could be cash to cash, so cash buyer, cash seller. You can add mortgage in there or finance, where again, the previous owner could have purchased the property through a bank. And again, there's different logistics that come into play depending on the variation.
Yeah. So it sounds like it's a little more complicated to do a secondary market transaction independently, as opposed to somebody trying to go and buy direct from the developer in the primary market. Feels like you definitely need a broker.
You do, because I believe with the primary market, it's down to a personal relationship with the developer. Most developers will have representatives, again, who keep you fully informed about the project. So because you are dealing directly with the developer, you have that extra aspect of security. When you are buying secondary, again, logistically, there is a broker, and a good broker will ensure that the buyer and seller both get a price that's favorable. But in the background, there's a lot of other stuff happening. You know, again, like we said, we mentioned the developer, there's service charges.
Yeah.
Again,
acquiring the NOC.
Acquiring the NOC. If you're potentially moving in as a tenant, you've got moving permit, other stuff to look at. You have to, whenever you even consider putting a 10% security deposit, you have to have a bank in the UAE. Or some form of escrow to be able to present a check for you in the UAE. So if you're an overseas buyer, if you're not in the country, again, this is where we start talking about the visa, the golden visa, if the property value is over a certain price.
Right, yeah. What are the risks and rewards associated with each type of investment, primary and secondary market, in your opinion? I
think primary market, one of the rewards is effectively capital appreciation. You can buy something at OP price.
Yeah.
And ideally, as it is getting closer to handover, once you've paid a certain amount to the developer, you have the opportunity to sell. So you've not effectively had something ready where, you know, has accrued some liabilities. It's just something you've put money somewhere, and in a year, 2 years, you've managed to take money out without having any like land or you know, managing a property
or unpaid service charges.
Unpaid service charges. Whereas, so I think that's one of the rewards. I think one of the risks is ideally it's normally down to developer most of the time. If you're with a good developer, chances are, if they've given you an expected handover date, then, you know, you get your property, you get the keys, and you can, again, do what you planned to do with this property. If it is delayed, then ideally you've paid everything you need to pay, but you haven't received your property. So there could be a period of 6 months, a year, I guess, in some cases, where you've not managed to, you've paid out, but you've not managed to see a return on the investment because, you know, you want to, the
property's not handed over.
It's not handed over. So that's from a primary perspective. From a secondary, I think the rewards, there's many rewards. So one, depending on area, you can get a unit, you can put a tenant in this market as well, which is booming. So straight away, you'll get a good return. Most of the time, majority of the time in Dubai, if you're a landlord, the returns are good.
Right.
Secondly, you could do, if you're in a waterfront location, you can do short term. So that's where we have
Airbnb model.
Well, we have locations.
Right.
That's our model. So you can do short term, and once you do speak to the locations team, they'll tell you ideally what they think you could get. Renting or leasing in this market. The other opportunity as well, another reward could be doing some quick renovations and being able to flip. Because bear in mind, all of this is a ready project. So it's time frame. You can move very quickly on this, a month, 2 months. But I think these are all the rewards. The risk could be market. It could be market changes. So if an area has decided, if some areas have changed, fluctuated in price, you could ideally have bought a property even through mortgage. Right. And then
essentially the value's gone down. Your EMI is still the same, so you're paying out more than you have to.
Exactly. Or you know, the previous tenant is paying really low because the market shot up. And in Dubai, the only reason or the only way you can get a tenant out is if you give a notice of eviction on the basis that you're going to move in to the unit or selling the property. Right. So these are common things that we tend to see in Dubai.
I understand.
And just to add as well, the rental index calculator was recently updated as well. So I'm sure there's going to be a lot of notice of evictions going out very
And that's
soon.
just an indicator of like the regulations responding to the current market, because there's a lot of people who were still in properties from COVID, and obviously those rates haven't been reset. They haven't been updated since that time, since 2020. The market's picked up significantly since then, and people were just not paying the kind of rents that landlords were expecting from new tenants that were coming through. So it makes sense that the RERA index needed to be reset, and I think that's just a healthy market response to where we stand today. I've always questioned what the risks are with secondary market, and the biggest one that I thought is you've touched upon a few more that I didn't think about before, but one of the ones that I've always thought of is you buy something now and, you know, like apocalyptic COVID situation and the market drops. And now you're holding on to a property that sort of is not as much as what you paid for it.
True, just to interject, but that doesn't, that's not unique to secondary. That could be primary as well. That could be, it could be in any country, in any market of primary, sorry, in any sector of primary or secondary. Because if there's a crash, for example, if I'm buying with a developer something primary and something happens in that area, or there's no urbanization, there's no development in the area, maybe like transport links.
You're right.
That could also change, that could also be a risk to me buying something like primary in that area. You know, if a market is going up and down anyway, if I'm buying primary or secondary, it doesn't really matter. It impacts both.
I think the impact on secondary market is actually less than it would be on primary market. And I was speaking to a client last night on the phone. He'd acquired just now acquired a property in one of the towers in Businessman. I won't name which one, but basically they were asking for 1.2 million, and he stuck down to the price of 900,000. And so he was trying to tell me that there's still distressed deals going on in the market, and he's acquired a distressed deal. And I don't know what I'm talking about by saying that the market is going up, because he found a distressed deal. And the thing is, and I said, why do you think that is? And I started to think about it. And I was like, okay, you know what, this person, he bought the property about 6 years ago. And since then, he's managed to make certain rent on it, right? So for the last 6 years, let's say even if he was making about 8% but somewhere between 8 to 10% a year on it, he's at least recovered 40 to 50% of whatever investment he made. He's made it back in terms of rental income.
But that's a reward.
That is a reward. I'm touching upon a reward. I'm saying that risk doesn't apply so much to secondary market, because even if the market does go down, you can continue to rent it out.
Yeah, so that's what I was
right, but
what I was mentioning earlier on. I don't really think as any owner for a secondary property, at any point you could sell.
You could sell, right?
You can get out. If the market's dipping, you have an opportunity to get out.
Right.
I'm not sure it's the same with primary, because it's depending on how much you've paid.
Essentially, no. But I think here's the thing though, with primary, and I'll expand on the rewards that I feel that are there for the off-plan market, is first and foremost, you're already buying it at sort of a cheaper rate than the current market price per square foot in that area.
Yeah.
Essentially, it's the money that you're collecting from potential buyers, investors, is what's helping the construction of the project. So you're incentivized to invest in, you know, on the ground level, you're investing in a project that doesn't have a structure up, you're investing in blueprints, you're investing in sort of in the sand. And you're incentivized by being given a lower price per square foot. And as the construction progresses, the price per square foot or the price of that apartment is meant to increase in value.
It goes up, yeah.
It goes up. Also, if you're buying off plan, you have the option of buying whichever units you prefer. It's a secondary market, it's only what's available in the market, what other people are selling. However, when you're going to a developer, you know, you can get that, potentially you can get that corner unit. You can get that corner 2-bedroom with the bigger balcony.
Depends how quick you are.
It depends on how quick you are. If you can get the best potentially units in that vicinity, in that project. And then of course, the biggest benefit is that you don't have to pay anything up front. It's a staggered payment plan. So you're paying over 3 years or 5 years. Now, if the market does go down by X% during the period of construction, and you continue to make payments against the property, there's nothing wrong with that.
Yeah.
Because essentially you never paid upfront in the first place. You know, you've only paid at that point about 40 to 50%, and you continue to pay another 5% or 10% per year. If you have a post-handover payment plan, which means that you can start renting it out. and then supplement whatever future payments you have against what rental income you have. So you know, even with off plan, I think there's it does suffer from the fact, like, okay, you do not make certain rental income during the period of construction. I mean, you don't have that benefit, but because of the fact that you have a payment plan, especially if you have a post-handover payment plan, you can greatly leverage that initial investment in equity into getting like massive returns when you sell it.
True. So let me ask you a question then.
Yeah.
So how do prices vary between primary and secondary market?
That's a good one. So, and I think again, it kind of what we touched upon a little bit earlier as well. It's with the primary market, you're always going to be incentivized to get something more attractive in terms of price per square foot than the secondary market. Okay. If you were to look at any of the projects that are happening right now in downtown, or in let's say, for example, Medan, the ready villas price per square foot is much higher compared to what you've got in the primary market. You're being incentivized to buy into the off-plan primary market because as an investor, why would you want to put up all of your capital up front when you can sort of you can outlay it over 3 years and then also be able to resell it at any time once you've hit that minimum 30% or 40%, depending on the developer. So I feel like off-plan for people who want to flip is a much better opportunity and a more attractive opportunity. I feel for people who want to, you know, just invest and grow their capital at a rapid pace, people who are a little more sort of, you know, have a little bit of a risk appetite. I think for them, off-plan could potentially be a better capital investment than secondary market when it comes down to Dubai real estate. That's just my opinion, and I have seen it work. I have seen people make, I'll give you a prime example of this. A client of mine bought the Vida residences in Dubai Marina for about 5 million.
A nice project.
It's a really nice project, and he got a nice 4-bedroom on the highest floor that was possible, right? Current market price for that is about 9 million. Thing is, he only paid till handover 3 million. So he's essentially, if he chose to sell today, he's made 300% on the 3 million that he invested over a period of 3 years. And that's a phenomenal return on equity. And I think that's the leverage that off-plan sort of gives you, and then secondary doesn't, but you have to have the risk appetite.
Yeah, you've got to have the risk appetite.
Because remember, Vida Marina got delayed by about 2 years.
Yeah, but also, Vida as a brand is a strong brand.
Yeah,
it is known. It's you know, it's not going toe to toe with Address, but in itself, it is a strong brand.
100%,
so
yeah,
you know, people understand when you buy something Vida, the quality is there. Whereas some other projects, some other developers might just be dipping their toes into Dubai.
Yeah,
might be new. So you have also like a risk of not seeing an increase of 300%
and we're getting
as well. So again, it's also the buyer, the client, the investor has to do their due diligence and again understand the best developers and somewhat understand the market.
Yeah, I agree with you fully. Like knowing the developer, knowing which developer to buy from. It's not necessarily that everything that you put in off-plan or in the secondary market for that matter is going to appreciate in value irrespective of where the market goes. You have to be able to identify the right project. You know, you have to do a little bit of window shopping before you pull the trigger to understand what is the value proposition for each and every project that you could potentially invest into.
What are the current market trends for both types of sell?
Good question. I was always of the opinion that off-plan sales outpaces secondary market sales. And I think that was true because the last couple of years we've seen an increase in mortgage rates. And a lot of people have sort of stood on the sidelines, not sure about wanting to step into that financial obligation at such high mortgage rates. And then also just trying to identify where the market is going to go. Yeah,
off-plan was very busy last year.
Yeah.
Certain communities like just here, Madinat Jameer Living.
Right.
Was transacting like crazy. You have, again, like I said, depends on developer, but some of the tried and tested developers were transacting.
I mean, we've had developers in off-plan, you know, rapidly accelerate projects that they were planning for the next 48 months to just launch them and sell them within the last 24 months. And the reason is because it's not just that they're trying to capitalize on this sort of uptick on price. There's actually a demand for it, right? And that's what they're trying to give to the investors there. Everything is almost selling out on launch, especially the good projects. You don't have any of the units left over. So developers are bringing in more and more sort of communities, more and more buildings, more opportunities for investors to come in. Having said that, last month, some of the figures were, we were almost 50-50. 60% of all transactions were related to off-plan sales. So sales volume, sales transactions were off-plan, and there was 40% that was associated with ready to move in properties. So we're seeing, and I remember that about last year, this was about a 80-20 split. So it was 80% off-plan sales and 20% ready to move in. And now we're seeing the market sort of finding its balance.
Yeah. I think it's very close.
It's quite close. It's quite close, and it's changed quite drastically over the last quarter.
What do you think's made it change?
I think there's just more. A lot of the off-plan projects that started 2 years ago are being handed over and delivered now, and the investors are selling on handover. So I feel like and then because the mortgage rates are going down, there's a lot of people who would prefer a mortgage as opposed to, because they don't have the cash flow to match the payment plans. So they would much rather go into a ready property as opposed to an off-plan one, simply because, you know, either the salary or the money that the cash flow that they have from their business doesn't match the payment terms. It's so much easier for them just to put down a 25% fixed deposit and then pay the EMI to the bank over 5, 7, 10, 25 years. So I think that's why we're seeing this shift. There's more ready supply that's entered the market, and there's more people that are willing to buy now rather than paying certain amounts of rent. Now rents have gone up astronomically, especially in the good areas.
Yeah, it's a good time to buy.
It is a good time to buy. It's always a good time to buy, I think, real estate. You know, it's going down. No, seriously though, if it's going down, buy.
Yeah.
Right? Why wouldn't you? If it's going up, buy, because
buy rather than rent. Yeah.
Buy rather than rent, for sure, because the rents are going up. And eventually, I have this question so much now. Dubai's market has peaked. We want to sit on the sidelines, and it's certainly going to come down. And I say, okay, you know, you couldn't be. Maybe you're not wrong. Maybe there is a chance we come down, but there's also a chance that we go up. And if we go up, you're certainly priced out.
Yeah, of course. That happened with a lot of my buyers. At one point, when I was doing a lot of brokering in Meadows, lots of the buyers I had were looking for particular units, 4-bed, type 2, type 14, pricing it around 4.8, 4.7.
Right.
And, you know, at the point when we were working together, the price was like 4.9, but they didn't want to budge. Now a type 2, type 14, you're looking around 8 million, 8.1.
Wow, they're kicking themselves a little bit.
Yeah,
I think
pretty much it's more than doubled.
Yeah, yeah. And I mean, look, you don't see that anywhere else in any other real estate market in the world. In the span of what, about how long ago was this?
Probably end of 2021, 2022.
Right.
So start.
So it's almost doubled in about 2 to 3 years.
Yeah.
We see this across the board, off plan as well as.
That was an email project. So,
yeah.
You know, with email, you know what you're getting.
I have a question. Do you see a lot of price reductions now in the market from sellers being a little more realistic with what they're asking for? Because we've seen this surge in price, and now everybody wants the 300% or the 500%, you know, X on their capital.
Yes, the market right now, it's so transparent. Any buyer, agent, sellers as well, there are so many platforms where they can go online and check the property price in relation to what it's transferred at, which is giving them, before we had this full sense of security as to where we think the market is and what it's selling at. But when you look at DLD, like live transactions, that is a conversation that every agent should have with every seller. We're now getting sellers who are more reasonable. And again, a serious seller will ideally want to sell at market price. It's very rare for somebody, a serious seller, to expect 20% on top of the current market, because the buyers are educated. they're not going to pay additional money for no reason.
You're right. Yeah. There's no reason to pay a premium if you don't have to. And if there's an unrealistic seller, my opinion has always been in these situations, when you have an unrealistic seller who's asking for 20% above market price, chances are that if you did manage to get him that offer, he'll go up again. He'll go up again. It's a complete waste of time. And they're just not realistic because they have no intent to sell, so they come up with these absurd prices. I also have a feeling that there's a lot of owners for secondary market units that have, like I said before, who've made rental income, who've enjoyed a little bit of premium and capital appreciation on the property, and now they're sitting cozy with the 6 to 12% rental yield that they're getting every year. Yeah. But then they also look across and then see the off-plan investors, and they go like, you guys are making crazy returns on your equity. And I feel like some people in the secondary market are liquidating because they also want to start investing into the off-plan things. Because why wouldn't you if you're already into it?
It is happening, but I feel like as well there's two types of investor. I'm starting to see that more and more the longer that I'm out here. There are the investors that want minimal headaches. Then there are the traditional investors that have always seen owning a property, putting a tenant in, managing it as the way forward.
You're right.
So, but whereas now the new buyers, the new investors want, like I said, minimal headache. They want to buy something and just get appreciation and get out without having to deal with water tanks, boilers, AC, all of that.
Well, on that note, I have a question for you. What investment strategies work the best for secondary market? I know you've touched upon this a little bit already, but if you had somebody who was coming in for an investment strategy and it was like, okay, off-plan investment strategies versus secondary market investment strategies, how would you lay it out for them?
Again, it depends on the investor's risk appetite. It always stems from that. Over the last, say, three to 4 years, it's been very obvious. A lot of buyers are buying in Palm Villas, Jumeirah Park, Jumeirah Islands. We now have Alpha Jan.
And Jumeirah Golf Estates also as well.
Yeah, Jumeirah Golf Estates. We have Old Town in Dubai. Normally, because when you look at a lot of these projects, all these communities, the interior is somewhat dated, but location's amazing. So they buy,
and the square footages are bigger.
Even I forgot to add Springs, Meadows, Emirates live in that community.
Yeah.
So again, from a risk, somebody who has a good risk appetite would ideally look at throwing a bit of money, doing some good renovations and being able to flip, because that's it's so lucrative at the moment. And then from a typical landlord would just buy it, rent it. Sometimes they don't even make the unit modern. They don't really do any renovations or any upgrades. They keep it standard because they don't really want to do anything, but they just want a return.
Yeah.
And then again, good areas, waterfront areas. It's so now apparent there's a lot more holiday homes, home companies, holiday home businesses, Airbnb, because the prices have just gone astronomically high. The hotels are, check a price of a night in a hotel, it's crazy.
What do you think the price difference is between, let's say, for example, what is the return difference? Somebody who's going annual rent on one of these waterfront properties versus if he was to put it up, on property management?
I think, so a typical property in Dubai, typical property that you rent with a decent rent, you're looking at possibly between 5 and 7%. Yeah, or even maybe let me go a little bit more conservative. Let's say 4.5 to about 7%. Okay. For a waterfront community, we have the office in Blue Waters. So one beds are going now for 5.9 to 6.2 for one bed in Blue Waters. They are renting out around 340, say 320 to 340. So area like that, you're getting a lot closer to 9.
Yeah.
You're getting a lot closer to 9%.
Right. That's
So
that's
and-
pretty high.
And this is when you start looking or delving into the waterfront communities, the Palm, as we mentioned, Blue Waters, high-end JBR. That's your address JBR. Levy, Port de la Mer,
Right.
Jumeirah Bay, definitely
One
Jumeirah
JBR.
Bay.
Yeah.
Jumeirah Bay, you have 1 beds now going 13 million. So
Yeah, that's where you can actually sort of really capitalize, even though it's a high entry point, but with respect to the returns. And I think the prices here will continue to just go up.
they're still going up.
They're still going up.
They're still going up,
because waterfront community, this is just very, very little space, isn't it?
Yeah.
There's limited real estate there.
Indeed, indeed. And a lot of people get confused and think that there's only 1 or 2 nationalities that are coming into these communities. But realistically, a lot, I would say probably 40% of nationalities are going for waterfront projects. A lot of Europeans. You do have the some of the typical local nationalities that are here who also still like the concept of a waterfront. But yeah, I think all nationalities, if they've got the budget for it, will go for it.
And I think investors locally are more educated with respect to this, but overseas.
Demographic of overseas buyers buying secondary is a lot more, it's shorter than in comparison to buying off plan.
From Spain, show up with a lawyer in Mars office because they wanted to read the SPA